right. Welcome everyone. We're going to be started up right now with scaling through M&A, making security maturity a non-negotiable in growth strategy. I'm Chris Risher, Senior Director here at Red Helm for consulting as well as digital innovation. I'll be moderating today's discussion. I'm so blessed to be joined by Jim Wilson, our CEO, bringing the board level enterprise value perspective, Michael Stratus, our president and founder, and he'll be focusing on compliance posture and executive due diligence, and Steve Feckety from Frontenac's financial leadership and value creation team, representing the financial viewpoint from an investor and acquirer's perspective. As regulatory pressures increase and security incidents carry greater valuation and integration risk, organizations, including PEGs and companies scaling through M&A, need a structured, repeatable way to understand and improve security maturity across their target and existing businesses. I want to go ahead and get started, Jim. You're going to be my first one. Hope you don't mind. I'm going to target you first since you're our CEO. Jim, from a CEO's perspective, how does a target's security posture influence strategic decision making, integration readiness, and the long-term scalability of an acquisition?
Yeah, thanks, Chris. Happy to be here and answer these questions. I mean, this is kind of the question, right? Whether you're looking to acquire or to be acquired, how much does the security posture and your cyber risk actually influence that? So, from my seat, I tend to look at this from four key pillars. One is operational discipline, one is integration speed, one is revenue growth in new markets, and then the last one is really long-term scalability. So, for operational discipline, there's obviously diligence items to look at how operations run, but security maturity is often a proxy in my mind and what I've seen through my career for actual operational discipline. So the companies that manage cyber risk well usually have stronger governance, processes, data management, et cetera, across the business. So operational discipline is obviously a key. The second pillar I talked about was integration speed. So integration speed, I think, is directly tied to security readiness and that operational discipline. So weak controls, disparate systems, unknown assets, et cetera, that slows down integration and the ability to bring, kind of companies together and really pour gas on the fire. That third lens that I really focus on is revenue growth in new markets. So I think cyber risk and your security maturity ultimately is going to influence whether or not you can get into a new target client profile, whether you want to move up market from SMB to mid market, or whether you want to move from mid market to enterprise. So, that also ties into whether you want to move into verticalized markets or whether you want to move into, highly regulated industries. So the more we see cyber maturity from a revenue perspective, the more that's going to either, limit or be able to expand on that growth. And then the last pillar really is, as I said, around scalability long term. So if you build all this framework off of a weak, security posture initially, that only gets exacerbated at growth and at scale. And I'll say from a financial perspective, it costs a lot less to get that foundation right early than it does to try to fix it when there's an issue later. So those four pillars or lenses that I look through obviously tie to that posture, but it really boils down to, I think, that cyber risk is impacting and being impacted through the deal structure all the way through. So whether that's price adjustments, escrow increases, or even like remediation commitments, if the maturity risk is lower, if there are issues identified, like that slows down a deal. And at the the net from my seat, Steve can probably talk about this more, is we're always looking at, are we acquiring value or are we acquiring risk, right? Are we acquiring velocity and the ability to accelerate growth, or are we acquiring something that's going to throttle that down and slow us down? So, those are the questions we look at, and security posture and cyber risk plays directly into those.
And actually, that segues really, really well into my question for Michael. And I'm really going to focus, Michael, I think, on long-term enterprise value. Jim started it where he talked towards the if you don't get it right now, and that acquisition or that target, that asset starts to mature into your portfolio, how does that shape long-term enterprise value for a strategic buyer?
Yeah. So I think that a few things. One is regardless of the buyer, strategic platform, whatever, it's a factor, right? Across. And one of the things that Jim pointed out that is probably going to make its way through all of these conversations is um, what side of the table are you on, right? The buy side, the sell side, and how this affects. And we'll talk about both, or I'll talk about both, right? Because I think it's important on both sides. Um, that posture again, like if you are ready from a posture perspective, if you are preparing for this as you go along, then it becomes an easier conversation if I'm on the sell side, right? I'm putting something in place to get the check boxes in place. And I approach it a little bit probably differently than a Steve would, because Steve is I'm going to look at it from a more technical perspective, right? I'm going to want to dig deeper. And so, like some of the things that we look for in doing these assessments go beyond just kind of like, I'll call it and it's not face value, but digging deeper into not just what the implications are at the time of acquisition and the sale, but also after the fact and how I put a dollar value to them, right? Before and after the sale, right? Because I think you and I talked before, Chris, about there's different levels of what those things are, right? And what those costs are to the organization. And all of those things are in play when you're having that conversation about, buying and selling, right? So I think that we've done a good job of putting together a schematic on how to evaluate all of those things to put them on the table for either side to look at and say, what's the value of this? Because if I don't take care of it prior to, I'm going to have to care of it afterwards. And what's the cost associated? And so, what's the maturity level of the seller versus the buyer, right? Like, we'd sit there and assume that the buyer is always going to have a higher level of maturity. That's not always the case, right? So you have to kind of look at it from that standpoint. Um, if the buyer has a higher level of maturity, they're going to look at the cost associated with bringing that potential acquisition up to their level of maturity from a security perspective, and or vice versa. And if I'm on the sell side and my maturity level is higher, then that's going to drive my value up more, right?
Mhm.
Even more. So, um, I'm going to flip back and forth between the two sides of the table. From the buy side, if I can acquire this company that has a higher level of maturity, then how quickly can I take that and potentially get that on this side to create or drive that long-term enterprise value after the acquisition versus having it be an expense, bringing it in the door. So I kind of went all over the place, but I tried to touch on both sides of the table on how that would affect the value, both in the short term with the sale, but also in the long term of what's going on after the fact, after the acquisition.
And since you called him out, Steve, I think that you should talk to, when you guys are looking at a deal, how does security and governance risks play into how you might structure that acquisition or that partnership with a new portfolio company at Frontneck?
Yeah, that's a great question, and I think Michael and Jim hit on some of the dynamics, but from a private equity kind of buyer perspective, incredible amount of areas where we're digging in during diligence, and historically, a lot of that was related to the front of the house, right? Front of the house and the leadership team. How does the sales team go to market? What type of talent do they have on the leadership team? Is the product any good? Right, and I think in the last 5 to 7 years or so, right, as technology automation, obviously more recently AI, have developed at a faster clip. It's been a much bigger focus from our perspective on the back of the house, right? So what systems does this business have? Are they scalable? Are they reliable? Are they secure? Is security focus of the seller as deep as their focus on growing the business, right? And these things matter more than ever. And so you now have folks like me, kind of operating partners at private equity firms whose sole focus during due diligence is to form a conclusion on the strength of the back offices, including cybersecurity, right? And so this conclusion directly impacts our excitement about the deal. And Chris, to your point, and Michael and Jim, valuation. A really good example So 2 years ago, we were 1 week away from closing out a business and found out through standard disclosures from the seller that they had actually been the subject of a business email compromise 2 weeks prior, and they
Mhm.
hadn't disclosed it until then, right? So our cybersecurity diligence indicated that there were processes in place to attack situations like this, but they didn't follow them. And so it was clear that they were not focused on security, but more so kind of checking the box on security like things, having documentation, et cetera. So as a result, our confidence in their security posture decreased, and we had them indemnify us against any fallout from any and all cybersecurity events for the first year of our partnership, whether related to that specific one or not. And so we didn't end up needing that indemnification, but it could have cost them a lot of money, right? So, Chris, long way to say yes, cybersecurity can in fact translate to financial exposure and or valuation adjustments, right?
Yeah, and I like that you called out checking the box. Michael, I something that there are a lot of stratusisms, if you will, that reverberate in my head often. What's one of them? One of them is if you're secure, you're compliant. Just because you're compliant does not necessarily say that you're secure. So we try to take that approach of, hey, let's get you secure. We'll get you to compliant just merely because we've got you secure. And I think that's a really good segue to just one quick thing I wanted to show, Steve. You hit on a key aspect of what an acquisition looks like and how security and compliance can really impact the structure of a deal. We see it at the biggest levels. And these are, two examples of, I'm sure many, you had one really good example, loved that. But, just, Verizon and Yahoo, Marriott, um, these things actually impact the structure of a deal. Um, so I want to shift a little bit, not drastically, but now let's look at how we measure security maturity in a way that acquisitive organizations, PEGs, companies looking to grow through acquisition can act on consistently. Steve, let's actually start with you from the financial part. How does I think you started with it in our last section. How does low, and I want you to hit on it harder, I think. How does low cybersecurity maturity affect integration planning, valuation assumptions? Um, can you talk to that a little bit, please?
Yeah, sure. So, you know, Frontenac is a lower middle market focused private equity firm. So, if we do things right, ideally we're selling to a larger middle market private equity firm, right? So, our focus during our partnership period with our companies is on building cybersecurity muscle and process, as the expectations of the next bigger partner will certainly be higher, right? So on several occasions, potential buyers of our businesses have been successful, right? When you talk about valuation, Chris, in getting us to pay for cybersecurity improvements that we had neglected to take care of during the partnership period with the management team, and vice versa. We've been successful in doing the same thing, and that's fairly common. And so, folks in the private equity community over the last couple of years are really starting to see them take cybersecurity more and more seriously. And we continue to see this be a big deal on most of the deals we're doing. Jim hit on it, earlier on the call. It's a good indicator of professionalization of the business and your ability to scale. I think your focus on cybersecurity, and we see this time and time again, is reticent of your focus on broader professionalization and technology and IT, et cetera, right? And so that's exactly why we're rolling out Red Helm's security maturity assessment in our portfolio. So is the measurement, Chris. So we need to make
Mhm.
sure that we are holding all companies to a high standard and that we're providing them the resources needed, right? The budget, the thought leadership, et cetera, to succeed.
Yeah, that's good. Um, Jim, when you're looking across a portfolio, because Steve started the discussion about portfolio companies and holding them to a standard, at least table stakes standard. You got to get to one standard across the entire portfolio, and then you can kind of start measuring them further. How important is security maturity in determining which companies can scale effectively? You started that discussion earlier.
Yeah.
Let's take it further. Scale effectively and withstand scrutiny from regulators, customers, and more integration teams.
Yeah, I mean, Steve hit on it from, assessing kind of that portfolio risk and getting to a standardized baseline. And we're seeing more and more private equity companies, really implement that, as you said, Chris and Steve, from a baseline of security maturity, cyber risk, and then iterating from there. But right, because disparate kind of maturity models or maturity from a cyber perspective causes really systemic challenges when you're trying to evaluate an entire portfolio or look at a fund. So within M&A as a company in a portfolio ourselves, right, with Frontenac, but then also as we look at acquisitions, security is just a gating factor, right? And I consider cyber risk and security maturity the same way I look at financial controls and really legal exposure. Like when we talk about, acquisitions and diligence, as Steve said, maybe in the past, 5, 7 years, that's really become, a big part of diligence and assessment. The main reason, and this is, I think, to your question, is you got regulatory exposure. That is to some degree, right? The check in the box, right? Are we hitting certain compliance audit requirements needed to be in the industry we're in, but to support the clients that we support in the industries they're in? And we're seeing increasing, levels of sophistication and expectation within many different verticals, right? If not all, to some degree of layering in of again, a certain check the box compliance. So Michael mentioned this before. Checking the box is a thing, right? Like that's the compliance. Now, compliance does not equal secure, but right, like it's somewhere to start from. In addition to compliance, I think it's also just the customer trust and the customer risk, right? So this now starts to lean into whether or not you're actually secure, right? Saying you're compliant or that you self-attested or that we're on a path in the next 12 months to mitigating gaps. There's a bunch of different ways, as we've seen both acquisitions and clients the get around the compliance does not equal security gap. So understanding compliance is one thing, but also truly understanding the risk profile and the risk posture, how the governance is implemented within a company, is significant, because ultimately, again, the risk on the back end is customer trust, customer attrition, etc. We talked about this, at least my first question there was the integration complexity, right? So the more disparate or the less you actually enforce a certain level of security maturity across your portfolio, the more difficult it is to manage today, but also to manage at scale, whether it is integrating multiple acquisitions, whether it's running, certain companies kind of as themselves under an umbrella, right? A powered by, Red Helm, or powered by if you're going to acquire but not fully integrate. But understanding the risk profile across a portfolio when it's very disparate and different, itself costs money to understand and then look at what are the priorities around mitigation. And the last thing I mentioned before is that scalability, right? Is it gas on the fire, or is it a throttle, right? Is it kind of down regulating, right? Can I scale quicker, right? Am I acquiring acceleration or deceleration in my actual growth thesis, right? Because we acquire for multiple reasons, but it's all generally around value creation and growth, right? So is it something that's ultimately going to slow that down and frankly make all of these discussion points more difficult potentially if we go to exit, right, for someone who's working with private equity, or if you're looking at what that next capital infusion is? Risk is a big deal, right? So that whole ability to grow and scale, you've got to show actual ability to do that. So the things we look at is, right, identity and governance. It's logging, monitoring. It's all the stuff that you're probably talking about, Chris. As we look at a security maturity model, what are the key things? But it's defined ownership, and governance is really what turns technical into, I think, business outcomes, right? We'll probably get to that later, but that's where governance starts to play into turning all this tech speak about risk. It often starts at risk mitigation into actual value creation, right? And that's how that, I think, governance helps to blend and transition that.
And I think it's a really good call, because if you can't define what the why is about, why you're doing the hows, all the technology and all, because the technology is less important. the why you're using that technology, whether it's security or digital innovation or digital transformation, whatever the thing is, automation, if the why or the mission isn't clear, you're probably not going to do the how very well. But what I found interesting about what you said is it segues really well into my next question for Michael. We tend to break up the different actions when we're going through our security maturity assessment. We kind of break those into two different sections. Critical risks. Hey, this thing is really a problem and it's a problem right now. And value creation opportunities. Can you talk about maybe the difference, a way to distinguish the two really quickly, Michael?
I have to remember to take myself off mute. So the echo. Quickly is a relative term. Um, yeah, I'll talk about that. Let me touch on something real quick on what Steve and Jim were talking about and who brought up, and it's just to simplify things, right? What you can see is security is involved in everything that we do, right? And it continues to grow because what I was going to ask Steve earlier was what, from a private equity perspective, how much was this even a thing 3, 4, 5 years ago versus what it is now? And it probably is getting worse. And not to make this even worse, but guess what's coming after this? It's AI, because we're going to be
Yeah.
dealing with that. And then the security of AI, because AI is basically a giant leap backwards in security.
Yeah.
Well, okay.
Michael, let me, I was going to address that following Jim's commentary, but this is a perfect segue. Um, this isn't an AI call, but AI is huge, right? And
Mhm.
as you can imagine, we're heavily focused on that. And we're almost finding that, security it's kind of like it's strategic tech debt at this point because AI is everything. But if you don't have your security in order, right, you can't run at AI in the way that we're probably going to want you to. Like that's the first step, right? And so it's a huge gating item. And so wanted to address that and throw you off your game a little bit. So why don't you jump back into what you were saying?
No, it's okay. I'm not really ever on my game, but the so having to deal with security, right, is not it's not going away. It's only growing. And now what we're having to do is deal with it at a level at the beginning, right, before you do an acquisition, not after the fact, right? It wasn't even an issue like 5 years ago, so to speak, right? But it's the same concept of what you deal with on a day-to-day basis internally with security now, whether you're the seller or you're the buyer. What is your approach to security, right? Are you more of a compliance driven or are you security driven? Not to go harp on what you said before, but that really is going to be a telltale sign of how you approach these things. And security is a cost versus risk. What's your ability to have the cost up front to mitigate the risk? If you are ahead of the game on that side, then you are going to be in a better posture, a better position, whether you're on either side to negotiate value, right? If I'm ahead of the game, then I'm in a good place because um, I'm in a better place than you are. And then, so the whole reason, or Steve, you had mentioned of us putting together the assessments that we do, is to push the issue of trying to drive what is considered a compliance type scenario to be a more security type scenario. Because guess what? After the deal is done, and this is like the technical guy going past the getting the deal done, but the focus is to get the deal done. Just like the focus with AI is to get the benefit of AI and the efficiency of AI, but we're not thinking about the security of it or as much. And you got to run at the speed of business. And the speed of business is to get that deal done. So I'm less interested in the security part more than I am getting the deal done. So I want to just check the box so I can get the deal done. But guess what? Once the deal is done, you got to deal whatever that maturity level is. And now you have the expense of it because the deal is done, right? So you have to deal with that up front. So our, contention is to drive that upfront assessment from the level of a security approach, not a compliant approach, because one, you're going to be in a better position regardless of what side of the table that you are on. And you're going to know what you're getting into and know what the costs are going to be either before or after. And that's where you drive evaluation up or down. So you want to raise the standard of that upfront and assessment to be at the level of a security and not compliance, because it's just going to mitigate a lot of risk moving forward. So back to your question. Um, and it was about the how do I evaluate maturity gap, and then versus critical risk versus a value creation opportunity, if I remember that correctly. Did I get all that? Obviously, different levels, and where you are at on either side, right? As far as your maturity is going to um, decide where the value is, right? Does that make sense? Right. So if I can take care of and or mitigate the majority of my critical risks prior to, I'm going to be driving up my value. I'm going to show that I'm at a higher maturity level than the people that I am selling to, or vice versa. They're going to drive the value down because, hey, I have to deal with this. Now, if my maturity level is at a higher level and I know I can mitigate these risks. Now, if it's so critical that I have to get this done before I do the deal, that's a different story, right? Because that's just going to drive value down versus if it's something that I know that I can do integration quickly, because we know integration is a big cost and a big driver, and not slow the integration across the board down. I can drive the value down, take care of those things after the fact, which is typically the gaps, not the criticals. So if there's more of those, then I can drive I'll call it the value creation up based on where my security maturity level is versus what I'm acquiring or what I'm selling to. Does that make sense?
Yeah, that makes total sense. And if I go back to our examples, I suspect there were some critical risks going into those deals. And unfortunately, I think maybe Jim, you were talking about, no, Michael, was actually you earlier saying you do the deal and then almost immediately you have a breach. That
You bought the
that
breach.
has impacts on potential contracts.
Yes. Unless you did
Right?
what
So
Steve
there's
did.
liability. Just like Steve, you were talking about with indemnifications. So,
Yep.
yeah.
But the
Um,
reality is, Steve, you still have to deal with it after the fact. It still slows down integration. It still is a tough thing to deal with. So you want to get that done or understand what you're walking into before you do.
Yeah, the indemnification is not, a replacement for just focus and investment on cybersecurity, right? Because how do you quantify the impact of, losing a customer or having that customer not trust you or what have you, right? So, agree.
Jim, I saw you come off mute. Did you have something to add there?
No, it's all good. I want to
Okay.
make sure we got a lot of stuff to
Yeah,
get
there's
to.
still more content. That's all right. All right. The next thing I really just wanted to show really fast. I won't harp on it too much, but I wanted to give a quick demo of how we do the security maturity assessment here at Red Helm. We utilize a platform called Synomi. We use a CIS framework as one compliance framework that's very highly accepted across many different industries. It at least gives a baseline that impacts a bunch of different compliance and security frameworks. We utilize Synomi to go through an interview process, gather evidence, and then we feed that into an automation and analytics model inside Power BI, where we are literally looking through specific different questions and controls, and then we feed out a risk posture to overall show where the company is at any one time during the assessment. Obviously, all these numbers get updated, and then we really do spit out. I'm only going to go through a couple of these screens, but we spit out some actionable information so that it's really useful to individual companies. Hey, how do I get to being secure? How do I get to being compliant? Instead of you get more technical jargon from us. We try not to provide the technical jargon. On top of that, we do this in two different ways. You can either do a one-time assessment with us, or what we prefer is to be able to constantly be reevaluating a company to show how they grow, show that progress over perfection. I know, Michael, you want to talk about that a little later, but showing progress towards being more secure, being more compliant. Because progress breeds momentum. If you think about it as a flywheel. The only other item I just want to show really fast is how we track over time with what if analysis. We can show you if you come to us and say, "Hey, I only have budget for these actions." All right, let me show you what it's going to look like in the future. Or if you're with us for longer periods of time, we'll actually do what the historical risk tracking has looked like over time. And when I talk about a recurring model, we do fractional advisory. If you go on our website, there's a blog entry that steps you through if it makes sense for you to have a fractional CIO, fractional CISO engagement with any company.
So, Chris, I think it's important to say, because you said about we don't inundate with the technical jargon, so that you have it in a clear way that you can look at and evaluate where you are from a security posture perspective. However, I think it's important to say we do have the technical jargon in
That's
the
right. You do.
background, and you have that data because, again, the nerd part of me wants to say, hey, it doesn't just stop at this port. At this part, it has to move on from there. You have to have the technical jargon because that's where you get the value creation of after the fact to get to a place quicker because you have a path to get there and you have the technical information and data that you need to get to that next place from a security maturity perspective, not just where we are in time, but how do you want to get to the next level? And so those what if scenarios are if I did these things and did this technical jargon stuff, how does that affect,
Mhm.
what my security posture looks like moving forward?
Yeah, and I think that when we built the security maturity assessment, we're trying to definitely talk to two different audience types at the same time, right? I definitely want to make sure I'm connecting with the CIO, the director of IT on how to secure them from a compliance standpoint, and I definitely want to make sure they have the power to go. I'm going to empower them to go talk to the CFO to go get budgeting to go get the needed funds that they will need to mature further. I think Steve, you want to say anything there? So especially since you partnered with me a lot on building this. So
Yeah, for sure. So you were getting at, identifying, needs and getting the funds to, act against those needs, right? Which is difficult in, certainly broadly, but definitely in a private equity environment, right? Where it's all about growth and net income and the EBITDA and like. I think that, we have, like I said last year, kind of made the decision to work with the Red Helm team to perform security maturity assessments at all of our portcos, right? And so non-intrusive, efficient process, cost effective, and each company diving a little deeper into the assessment that Chris was just showing is judged against a rubric that is aligned to their specific industry and size, right? So make it very clear what we need to improve upon to achieve the security maturity that we're striving for across our portfolio. And it enables us to work with our management teams to get it done. And so that's critical because everyone is focused on top line, gross margin, right, et cetera. This is really important too for a lot of the reasons that we've already discussed in this call, and to be able to go in with a structured approach and say, here are the risk factors from a cybersecurity perspective. Here is the priority for remediating those and working on
mhm.
them over time, and bringing that to a board level, which we're now starting to do across our portfolio, has been instrumental when you think about just getting things done from a cybersecurity perspective and like getting the approval for the use of those funds and for getting the budget, for getting the resources, right? And so, yeah, hopefully that's helpful, Chris.
And coming out soon will be a kind of a new feature of a baseline across a portfolio that is flexible based on industry. We weren't ready to present that in this webinar, but in a future webinar, we definitely will show how we are flexible to work towards what the portfolio looks like, especially for either a private equity group or if you're an acquisitive organization and you're definitely acquiring multiple companies and we need to flex that baseline of different categories of things that we need we need to capture over time, that is something we're flexible to.
And Chris, just one thing I wanted to add, because I sit at this fun intersection of, right, like kind of internal and CEO, obviously, but I'm on the board and work with the PE side and the acquisition side quite a bit, is to kind of round this out. Depending on who I'm talking to on what day from my seat, it's really important to understand all the technical, true risk from a security perspective. But in another conversation, it's, I don't want to talk technical risk. I want to talk business risk. And I want to turn that business risk discussion into now business capability discussion, right? So this is, again, with that security maturity model that we have, having the technical underpinning, as Michael said, we've got all the tech in the background. We could talk about it, but putting that into perspective of, hey, here are priorities, and not just here are priorities because we said so, but whether it's vertically aligned to, make sure that checking compliance marks are important, but then getting to business capability, right? And again, not an AI call, but it is. This is the conversation of the day is, hey, we have a business case, we have a business need, we want to start, really, super powering agentic AI to go out and work and access information, access data, and cross boundaries before that maybe we didn't let people cross, but it's okay because it's AI, right? Is the question. And we come back to, a certain level of governance, certain level of maturity around security in general in a framework. And this model allows us to understand where can you start to push some of those capabilities of the business? Because yes, you've got the technology, and that risk has been, mitigated, but also now it's from a business perspective. What can we do once we mitigate some of the technical challenges from a security perspective, and where can we go and where can't we go until we do that? It's really important to understand that in the context of your own vertical, your market, and you as a business. What are your priorities, right? Because how we prioritize security, yes, there's compliance. Yes, there's a minimum framework. But then where you want to take your business is where we customize this to make sure that you're secure with where you need to go to move the business forward, not just because, security is the same for everybody. So
Yeah,
that's
because
just really important.
yeah, because it's really not. It's not the same for everybody.
Right.
A food service provider versus a healthcare provider have very different needs. Not saying that there's less need for the food service provider. It's just very different. This is highly
Exactly.
regulatory, like regulated uh, up here in the healthcare space. Food service is regulated, absolutely, but in very, very niche areas that we have to focus on. So absolutely, completely agree, Jim. Something that shifts me towards Michael. How does automation, like the real-time dashboards and near real-time dashboards that we're just looking at, change how leadership views or engages in conversations about risk compliance and integration readiness?
Made sure I was off mute. Um, so what I would say is I'm a visual person, and most people are, right? So you can have a conversation about something, or you can send an email, but if I have a visual way to look at something that's backed by data, right, and then I can track it over time, um, I think it's invaluable, right? You need to have that to see where you are and where you're trending toward in the direction that you're going. So um, from a leadership perspective, and again, I'm going to go back to it depends on the leadership that you're talking about, because Jim, like he said, he wears many hats. He talks at different levels. So leadership from a board or private equity perspective, leadership from a um, on the technical side of things, leadership from an ELT perspective, they're all going to look at different things. But the dashboards that you create, as you said, you talk to many different audiences so that those dashboards that you create can be catered to the audience that you're talking to. So it allows them to consume that data in a way that they can digest it, understand it, and make good decisions based on how that dashboard is giving them the data. Right? I think it's a invaluable way to take all of the geek part of what we do and put it into a digestible format depending on the audience. And like I know that you've done a good job with Steve's help and whatnot to create these dashboards in several different iterations and going back and forth, even to the point of customizing them based on a particular vertical, right? Or like you said, healthcare versus a food service versus a manufacturer. Everybody has different needs and different things that they look at. Um, so the automation part, it's a time saver, right? For everybody, right? Anything that I can automate and make easier and quicker to data helps integration, helps, move the company forward in every different way. So, um, I don't, I don't know how you function in a efficient fashion without something that does, takes that data and puts in a dashboard that you can then have actionable items based on that. And then it becomes a rinse and repeat. Okay, this month we look at the data and then we see what the progress is next month based on those dashboards. Jim has done a great job of helping us in many areas, even outside of the security part of things. We have dashboards, we have things that we're tracking. I mean, every company does. I think it's absolutely in this scenario, something that you don't want to do without.
You're pulling at my heartstrings, Michael. You know that I'm a data guy. I like visualization. I like to build visualization and move data. So you're pulling at my heartstrings. Appreciate that. One thing we do want to. Oh, yeah, go
Thing
ahead.
that Steve helped us out with is data, and we're all data geeks and we like data to run our business, but the data and how it is presented is vastly different based on the audience. So that's been something that we've worked on how are we presenting that, and the dashboards are indicators of that.
Yeah, we definitely have had a lot of cycles around how to tell the story right. The story is important. It's not just about the data, it's not about the tech, it's really showing the story correctly so that we get a narrative that's useful and purposeful and valuable. So, one thing I want to interact with our attendees a little bit. We've got a poll. We're interested in understanding what compliance frameworks that if people are out there looking, I'd really be interested to know what certifications, what compliance frameworks. So if the team could throw up the poll, thank you. So which compliance framework is your highest priority over the next 12 months? SOC, ISO, CMMC, CIS, NIST, High Trust. There's a few on there that um, actually have a certification, a couple on there that don't really have a certification. If you do select other, I'm interested in knowing what's your other. I think we'd all be interested to know what your other. I've come across a couple of companies that were looking for. There's an ISO standard for Australia. I think it's like I'm going to get geeky for a second, 27009, or it's an international standard. So that was something new for me. Mostly we go by US and European standards, so that was interesting. Give everyone another like 30 seconds or so to put your answers in, and then we'll talk about the results briefly before we transition in the last section of questions. All right. Team, you mind throwing up the results for us, please? If we had any, voters. Yeah, we got a couple. Oh, all right. So CMMC and NIST. NIST is kind of that baseline one, but we have gotten a lot more people that are interested in CMMC. Happy to have that discussion, by all means. I do want to shift into the last couple of questions I have for you guys if you're ready. Um, Jim, when discussing M&A related investments with boards or investors, how do you articulate the ROI of strengthening security controls early? And we talked about this a couple of times. I think it's really important to talk about early strengthening and progress, before issues compound post close.
Yeah, I mean, I think everyone's touched on this to a degree, but we'll put a button on this one specifically. I do think that the ROI conversation often starts with risk avoidance, right? Everywhere, whether it's technical risk avoidance, business risk avoidance, right? It's all about avoidance, and many times, right, looked as a cost to avoid again the or to mitigate the risk to a business. But in terms of how I think about this and discussing whether it's with boards, investors, et cetera, is you've got to pivot that. Yes, that is a thing. You've got to pivot that to value creation and business capability. So you can go through and check boxes, mitigate risks, and get to a certain, minimum viable level of security. But you've got to build in governance so that when disruption happens in the future at any level, you can absorb that, you're resilient, and you move forward, right? Like certain processes in a business do not equal good governance. If you have good governance, you will also have good processes. I bring that up because now where do we invest dollars and why do we invest dollars potentially to again mitigate technical risk, mitigate business risk, but to really create business capability and value creation. So back to things like deal certainty. If we're talking about trying to get to the deal, right, that's where having a high level of governance, good security maturity and risk mitigation. Like deal certainty is great. No one wants changes. No one wants to have to go back and do adjustments or put in indemnifications or commitments if there's something that's uncovered. There's, as we talked about, faster integration scalability, faster, revenue enablement. With all these things in place, these are the business capabilities, not just risk mitigation. And now, again, we're talking about AI, and we're in technology. Every company is at this point. In the next 3 years, we don't know what's coming. So if you have a solid foundation, a solid framework, and solid governance, you're going to be able to absorb and accelerate into that next step of technology. So that's part of that business capability when you talk to boards and investors. If you just reach the minimum capability to check a compliance box to get a deal done or just to get to the next step, you're not going to be ready to accelerate and grow the business in the coming years. So, again, it often starts with mitigation, and right, like it's the tough to prove a negative, right? Like, well, what would happen if we didn't spend this money, right? What's the minimum money we need to spend to get to the minimum level of whatever compliance? But turning that into, what does that mean to the business? Can we go faster? Can we do more? Can we open up revenue channels, right? How do we turn this into business capability discussion and value creation discussion, not just, we've got to spend a cost to avoid something. It's turning it into something we can actually leverage for the business. And frankly, I guess I'd say, unfortunately, as we look at across the landscape, it still is a differentiator as we look at both acquiring and companies we work with. Those companies that have strong governance and a strong security framework, they can move more quickly and be more agile when things come up that are the next iteration of technology to help them specifically in their industry. It's technology is a differentiator, and it will continue to be. Having security governance in place allows you to move faster, right? And that creates value.
And I love that. So IT as an enabler. We've definitely taken a full shift from IT being this cost, IT security being a cost, to a business empowerment enabler. It has to be that real digital transformation, whether it's security or IT, it's supposed to help products be pushed forward within the business or business operations or the services, enable them to enhance their ability to service clients, to service internal employees, what have you. On that note, what I did want to put out there is we do think that obviously there are people out there who want to do this stuff, do the security maturity assessment, understand what their portfolio looks like on their own. We did put together a little checklist, a little artifact for you guys to take away. If the team could post that into the chat, we'll also send it out post the webinar. Just if it gives you at least a framework to create your own security maturity assessment and what that might look like. There it is in the chat. Appreciate that. And with that, I'm actually going to transition us into Q&A. So I think we actually already have one question in the chat. If I can read it at the same time. I think this one's for Steve. In your experience, is there maybe if you want to read it out, Steve, and then, answer it.
Sure. Thanks, Ryan. Ryan Campbell, everyone. I think questions around, is there a consistent blind spot in pre-deal diligence that reliably becomes a day one fire drill, right? Even when the diligence was solid. And I think, as frustrating as it is, it's a great question. You can have the best controls and security features in the world, but when it comes down to the individual folks behind the keyboard, it's really easy to tell a buyer during diligence that employees are aware of threats. We have know before, maybe we're using it, but when the rubber hits the road, that's always the biggest issue. Is like people, folks at portfolio companies, they know who we are, but they don't know us, right? And so we've had issues before where, like from a BEC, business email compromise perspective, folks at portfolio companies will receive an email and it's from uh, SFEKUTY at frontandact.com, my email address, but the E is Gaelic, right? And it's somebody trying to kind of get in, and it's like, oh, please send this money, or please click on this link and do this. And so that happens all the time, right? And so without provide going too far down a rabbit hole, I think employee awareness is where we have the biggest issue, and it's the hardest thing to vet via diligence, right?
And
So
I love that you brought that up. Michael, you and I have talked about this before, especially during the like that early part of the transaction, early post close, maybe even pre close. Would you say that that may be one of the most vulnerable spots, like as you're starting to transition into integration? Let's say we brought together two companies, an acquisitions occur, we're bringing two companies together, we started integration. Would you say that that's a vulnerable spot for companies post close, and why?
Is that rhetorical?
Yeah, and it's not rhetorical. I don't think it's always obvious sometimes.
100% is. It's whenever we're doing acquisitions or transactions like that, we're posting it out on social media all over we want to, it's a positive thing, right? That is an absolute pipeline for a threat actor. They are looking for that because it's also a time of integration, which presents a lot of ambiguities and confusion and people that are getting to know each other and who am I working with, and depending on where you're at in the organization, you want to please the people that acquired you or who your boss is now, and things change, and you don't quite know the whole organization. And like you just said, Steve, with a letter off on something with somebody's name, they see names, they're not 100% sure of these people. So you can see a lot of those situations where what is already tough to manage just became even tougher when you took one organization, combined another, and you're combining the potential exploits on both sides now into one. And if I can exploit here and I'm trying to integrate the two, I potentially can exploit both, right? And in that middle period of integration, it's not that security is laxed, but there's just more room for error. And that's what threat actors prey on, is human error, right? You clicked on it this time.
Yeah.
Most of the 99% of the time you don't click on something, but you do, or you did click on something here. Not to go down this rabbit hole, but that's the whole point of why when we're doing these assessments, we're not just looking at the standard security from a perimeter perspective, but we're looking at it. How are you protecting it once you're inside the house? That is where security is at. Two things. One is, how are you protecting inside the house? Because I'm going to assume that threat actors are going to get in. And when I'm doing an acquisition or an integration, it's typically easier to get a avenue inside, right? So that's definitely a big deal, or a prime time, to be a vector of attack, right?
Yeah.
So we'll take advantage of that.
Yeah, I think with that, we don't have any more questions. So really appreciate everyone joining. Please follow us on YouTube. We'll probably snip up this webinar, and you can even see previous webinars on our YouTube channel. Contact us at marketing@redhelm.com, and definitely be on the lookout for next month's webinar. We do one a month, and we'll be sending that out on our socials, LinkedIn specifically, looking for registrations. Thank you so much. Have a good evening. Bye.